We start today's market talk. The best investment strategy for 2025 is the same as for 2024 or any other year. So it is not about picking which sector will outperform or whether small caps will beat large caps. It is about having a clear financial plan that matches your investments to your time horizons. The calendar will change, but principles of sound investing won't. So stay invested, diversified, keep your costs of acquisition low. Everything else is just noise. Market outlook as I see it. Firstly, last week was totally for the new listings. They continued to dazzle despite the market turbulence. The breadth and depth of India's capital markets improving is a positive factor. Uh, the mood change is quite visible in the primary market. Even foreign companies like Samsung and LG are also looking to go public. New companies are coming from diverse sectors, and fund managers now will have wider choice. The big problem is Fed. It is positioning for inflationary effects of the incoming administration, that is Trump's administration, inclination for higher tariffs, big tax cuts, and significant labor force retrenchment due to large-scale repatriation of illegal immigrants. What is happening is that the Fed's policy is highly reactive, which amplifies the financial volatility. This matters beyond US as US is the only current meaningful locomotive of global growth. Now on Friday, the rupee posted its steepest single day loss to end trading at 85.53 against the dollar. During the day, the rupee had fallen to a record low of 85.83 in intraday trading, driven by demand from importers, concerns over trade deficit, and economic growth. There is a criticism that RBI has been overprotective for exchange rate and it should let market forces have greater influence. So I think now with the change in governor at RBI, the rupee is likely to depreciate so as to reach its true value. We should expect 2025 to be a year of lower interest rates. Starting February, MPC will shift gears to cut rates. Banks will then tweak their lending rates accordingly. What MPC will have to focus on now would be spurring growth, then targeting inflation, but pressure due to depreciating rupee, food items, and housing related expenses will persist. Now coming to US markets snapped 2-3 weeks of decline, but the bond market sold off, and the US Treasury yields rose and are putting pressure on equities. So if you see here, the US bond yields, 10-year yields, have risen consistently for the last 3 weeks and have now reached that 4.62 level. And so if you and the high it has had is around 5, so it is on trajectory to reach there. So now if you're a foreign investor and you're getting risk-free 5% in US along with a currency appreciation of vis-a-vis emerging market like India of around 3% per year. So the net money you are going to get is around 8%. So why should you invest in emerging market and take a risk of equity which may or may not go up? So that is the reason why the money is moving out from emerging markets and moving into US. Dollar index has retraced after correcting to around 100 levels, has come up to around 108 levels. So this should be somewhere close to that 61% retracement, which should be a level up to which it should logically go. Beyond that, it will go to that 114 plus levels. Otherwise, it will start retracing from there. So let's see what happens. Brent crude is in the declining trend because there is not much of demand is expected next year from China, etc. Gold again is not really in momentum now and is going coming down, and now it has come down to the trend lines on which the rising trend line support it has reached now. The fall in gold is also due to strength in dollar. Again, copper is been correcting and now it is below the 50 EMA. It is because nothing much of industrial activity or growth is expected from China. So the demand is lower and the supply is adequate. Bitcoin corrected last week and has now come down to that 94 level from the highs of 94,000 level from the high of 100,000 it had reached. So it will now look for fresh news and triggers for it to go up. Nasdaq is in a upward trajectory and was up around 0.86% last week. So after the last week was slightly weak, but now it is rebounding back. Similarly with Dow Jones, it had corrected for 3 straight weeks and has come down to that on the weekly chart, come down to the 20 EMA, and from there it has bounced back a bit. So it was so we'll have to see what happens with it now. Coming to India, India VIX is on a declining trajectory and has come down to around 13.2 odd levels. It rose up this week, but has declined from there. USD INR continues to move up. This is a weekly chart, so it had a gain of around 0.52% last week. Nifty 50, if you see the weekly chart, this week's green candle was fully enclosed by the red candle or the big red candle last week. It is below the 20 EMA, so on the weekly chart, so it is slightly weak and there is not much of momentum. On the daily charts also, it made four inside bar days last week, and it is just above the 20 EMA, and this gap will provide resistance initially. And basically the meaning of this gap is that at every level, the guys who are having positions, long positions at high levels will square off. So the selling will come. So till the time it doesn't sustains and trades above this 24,200, 300 levels consistently, it'll keep coming back to these levels. On hourly charts, it uh, it it was it was stuck in this range which it had declined last week, roughly around 23,900, and on the lower level around 23,650. 23,650 is a 200 EMA on the daily chart. So, but it closed above the 20 EMA on the hourly chart, so which is positive. From oversold levels, it has bounced back a bit, but it is not having momentum to go above this 23,850 level. Uh, at high levels where it went on Friday, it got sold off and has come back to below 23,850. Nifty Bank, similar charts, uh, was up around a percent last week, but it is below 20 EMA, and again it is enclosed within that large uh, red candle last week. No momentum is there. Similarly on the daily chart, so same inside bar days, and it is between 100 and 200 EMA. So let's see which direction it goes. The problem with Nifty Bank is that HDFC Bank is weak now, below 1800. So if for some momentum, it has to go above 1800. Otherwise, it will drift down to 20 EMA at 1730. Reliance looking weak on the weekly charts. Also, it is below 200 EMA, and it took support at 1200. So it's tried to bounce, but we'll have to watch this very carefully as such. Midcap 100 index on the weekly charts is about 20 EMA. So it didn't do much last week, and it is still poised. It can go in any direction right now. The small cap index, though it is above the election day highs, and it's above 20 EMA. But again, it didn't do much last week, was negative last week. So uh, basically due to low volumes, etc. But we'll have to see from which direction it goes. This month it had made a fresh high. So after that, it has corrected. Now I'll cover three stocks today. First is Nuvama Wealth. It's a play on multiple themes in the capital market space, including ultra HNI wealth management, affluent segment wealth management, and AMC. It services the ultra HNI segment under Nuvama private brand and has scaled up to rupees 2.1 lakh crore in AUM as of September 24. It has already initiated licensing and hiring in Singapore and Dubai. So basically, it is looking for the ultra HNI clients who are NRIs, etc. The mid-market segment is served under Nuvama Wealth and is among few non-bank players with a meaningful scale. It plans to grow this segment exponentially over the next 3 years as it expands its RM base at a 25% CAGR and deepens its geographic presence. The capital market segment accounts for 50% of Nuvama's revenue and comprises investment banking, institutional equity, and custody and clearing business (CNC). It's a SEBI-registered securities custodian and designated depository participant (DDP) and a professional clearing member in the derivatives segment. A significant portion of revenues are derived from high-frequency traders and the float they bring into trade in derivatives. Given the sustainable long-term potential of the derivatives segment, expect this segment to witness strong sustainable growth in revenues. In FY24 and first half FY25, the capital market segment was the largest contributor to overall profitability. Operating PBT in this segment is to deliver 32% CAGR over the next 3 years. AMC business is in early stage, AUM of around 10,300 crore as of September 24. It has built a diversified suite of AIFs and PMS products. So if you see there, Nuvama Private caters for ultra HNI clients above 25 crore, has got around 4,000 clients. Nuvama Wealth caters to those below 25 crore to up to 5 crores, has around 1.2 million clients serviced by RMs. Uh, Nuvama Asset Management, AIF and PMS part, and then capital markets, which is broking, investment banking, and custody and clearing services. Average client assets for Nuvama Wealth expected to see around 27% CAGR. Revenue CAGR of around 23% in wealth part. In private, expected to post 20% CAGR growth and revenue CAGR of around 21%. So if you see here, it is expected to go up around 20% in terms of revenue, all segments, though the capital markets is roughly 50% of the total revenues of the company. Improvement is around 41% this year, but after this, it is expected to grow around 20%. So CAGR growth will be around 20%. Expenses have come down, and though it's higher because of higher RM cost, profit before tax has improved and it is improving. And PAT is also going to be up around 60% this year. And it is likely to double by FY26 from FY24. So FY24, it did around 596 crores. So it is expected to do around 1120 odd crores in FY26 and 1290 crore in 27. So it is likely to double the PAT over the next 2 3 years. Uh, Capital markets segment is roughly 50% of the revenue of the business, and PBT margins and PAT margins are high. ROE is also improving in 30% plus. So with a business where 20% growth is there for the next 3 years and PAT margins of roughly 30% plus and PBT around 40% plus and ROE is at 30% plus, it's a very attractive business with decent dividend yield of around 2.6% and EPS of around 315 odd for FY26 and 360 plus in FY27. So roughly you can take around 340. At 2025 times, it should trade between 6,800 to around 8,000. So if you see their chart, it has risen up after the June quarter results. It had gone up. After that, it is in that range as such. And right now, it went up because of the recent interest in wealth management businesses. They did a QIP, etc. So it has come down, and now it is at these levels. So anywhere close to this 6,800 is a decent level to get this stock and accumulate it on all dips. It has always taken support even on bad days on at 100 EMA. So if you see last times, it has taken support at 100 EMA, and this 6,500 should be a very good level to buy this stock. Next stock today is KFIN Technologies. It offers a diverse portfolio of services with exposure to stable and mature businesses like mutual fund, RTA, company issuer services, and high potential growth stories like international issuer solutions, AIF, and fund accounting. RTA is registrar and transfer agent. Companies asset light and stable growth businesses benefit from macro tailwinds like sticky SIP and retail flows and increased retail participation of the corporate activity. It has 32.4% of AUM in duopoly market. The other person in this space is CAMS. It's a mutual fund RTA business, account for around 71% of the total revenues. It is gradually evolving into a data processing and analytics solution provider with a higher share of value-added services as a percentage of revenue. Right now, value added services is around 6%. It has advantages such as higher exposure to small mutual funds, better than industry exposure to high yielding equity and balanced average AUM, and higher market share in equity and balanced AUM because that part has higher yield. So it's got around higher percentage of balanced and equity funds as compared to its overall average AUM. It maintains NPS subscriber records and provides administration and customer service functions. Its foray into global AMCs and AIF segment will expand its product portfolio. Strong product proposition and rich experience in offering investor solutions can enable faster growth. By leveraging superior technology and other value-added services, it has secured market leadership in issuer solution segments, 48% market share in NSE 500 by market capitalization. So if you see here, in mutual fund RTA, it has been increasing its market share. Mutual fund AUM growth is also going up, roughly around 18-20%. Mutual fund AUM growth, equity AUM growth is higher, and share of equity and non-equity mutual fund AUM. So it is growing its share of mutual fund equity AUM, which has got higher margins. Issuer solutions also, it's increasing number of clients and more than 2.4x growth in folios in the last 5 years. And overall corporate activity driving growth in IPOs handled by KFIN, etc. So last year it had handled around 28 IPOs. So this year now the IPOs thing has again started. It was subdued in this period of October, November. KFIN command more than 45% market share in NSE 500 companies by market capitalization. Increase in global AUM service by KFIN led by growth in number of clients, rapid growth in alternate and wealth AUM service by KFIN, operating leverage facilitating a decrease in cost to income ratio, and trends in EBITDA and EBITDA margins are better, and it is improving. The EBITDA and EBITDA margins are improving. Cost to income ratio because of operating leverage is coming down. So the PAT margins are improving and ROE is also improving. That is why it is right now trading at roughly around two times or 2x standard deviation. So it is right now expensive. Coming to its revenue, this year is expected to do around 30% plus revenue growth, but after this it is going to be around 18-20%. EBITDA is expected to grow in 20-25% higher. Profit before tax is also expected to grow around 30% CAGR, and similarly with PAT, it gives decent dividend, roughly around 40% of the profit. So it is expected to give dividend. So if you see here, it is expected to do a EPS of around 26.8 in FY26 and around 33.8 in FY27. So taking a mean of around 30 for both FY26, 27. Right now, this is at 50 times, which is slightly expensive. It has a decent dividend yield of around 1.3 to, and which is going to increase now. So this stock moved up in November once there was a lot of enthusiasm with the capital market stock with higher volumes, and every time it has had higher volumes, it has moved up and then has tend to go down and test this moving averages. So somewhere closer to this 1200 level should be a decent level to buy this stock. Right now, this is very expensive and overbought. Time Technoplast. It's a leading manufacturer of polymer products. The company's portfolio consists of technically driven, innovative products catering to growing industry segments like industrial packaging solutions, lifestyle products, automotive components, healthcare products, infrastructure, construction related products, material handling solutions, and composite cylinders. It operates more than 34 production facilities across the globe and is recognized for its innovative plastic products. It recently became the first company in India to receive approval from petroleum and explosive safety organizations for manufacturing of Type 3 fully wrapped fiber reinforced composite cylinders for hydrogen powered fuel cells, unmanned aerial vehicles, and drones. This follows the earlier announcement dated 20th June this year when it had received approval for high pressure Type 4 composite cylinders for cascade storage and transportation for hydrogen. While LPG and CNG cylinders are well established, it is working on the development of many new innovative composite products, including oxygen cylinders, fire extinguisher, etc., which can have high potential in the coming years. It aims to raise its value-added products revenue mix to 35% in 3 years from 25% in FY24 and push consolidated EBITDA margin to around 15% from 14% right now. It has uh, planned to raise up to 1,000 crore via QIP for various activities, including CapEx, debt reduction, working capital needs, acquisition, etc. So if you see their sales, quarterly sales, they did nearly the highest sales this quarter, and operating profit was highest around 196 crore. Operating margins are now firmly in that 14% range, and net profit has now reached triple digit. First time it reached around 100 uh, crore. So based on this, with a growth of around 14% year on year, with EBITDA margins around 14.5%. They are expected to do a EPS of around 22.5 in FY26 and around 28 in FY27. So roughly, they should do a EPS of around 25 in 26-27 with a decent EPS growth, which is in double digit, 25%. EB/EBITDA is declining. ROE is also going up, so which is positive, and debt is not there. So they have cleared off their debt. So it's a cash flow positive business. So considering all this, so keeping a EPS of around 25 for FY 26-27, at 20p at 500, it's fairly priced. These are the products. Established products are industrial packaging, infrastructure, lifestyle, auto components, and now they are coming into bulk containers. New generation LPG composite cylinders. So the cylinders from metals will shift to polymers. Films, smart films, CNG cylinder automotive, composite leaf spring, and CNG cascades. Now coming to their chart, uh, it had dipped to around this 370 odd levels in November. And now it has risen up because after this positive news related to approvals, etc. So every dip is a buying opportunity somewhere close to this 440, 450 level. So that, and it's a investment call. So sustainable, uh, it's a sustainable business because they have a lot of competitive advantage in terms of their products. Uh, I have finished. We will take questions now.